Hey guys, it's Realtor Adele, your favorite realtor and investment property strategist with your monthly housing market report for February 2023. Now that we've comfortably settled into the year, let's take a look at current housing market trends and what we can expect as we make our way through the upcoming months. Mortgage rates are finally on a downward trend. The peak for rates was a few months ago in November when rates peaked to around 8%. We're currently in the aftermath, and it's all about bringing stabilization to the marketplace. Within the last 90 days or so, we've seen rates drop about a point. With that said, there are two things to note there. First, the rise in rates was necessary in order to tame inflation. And number two, although rates are trending down, don't expect a drastic reduction. Rates are expected to toggle between 5 and 6% as the year progresses. Note that these are expectations and not guarantees. Of course, as you know, nothing is. Let's review this 30-year fixed mortgage rate chart from Mortgage News Daily. To the left of the chart, those numbers indicate interest rates. And to the bottom of the chart, you will see month by month, a year back. Now the blocks are filled in red, light red, then you have a light green and a Kelly green. These blocks indicate buyers' response to interest rates. So naturally, when rates were close to 8%, there was very weak buyer demand. Most home buyers were priced out of the market due to elevated home prices and elevated or spiked interest rates. Many home buyers put their home buying plans on hold. Now, as this year, the first 6 weeks, as mortgage rates take that downward trend and stability returns to the marketplace, we are seeing home buyers re-enter the market. And of course, that buyer demand will continue to get stronger as interest rates stabilize even more in the coming months. Now, as you can imagine, elevated interest rates and elevated home prices makes home buying unaffordable. Once they stabilize, then home buyers will re-enter the marketplace. And so, for instance, someone who was approved for when the rates were around 3% about 2 years ago, of course, someone who may qualify for $300,000 may have been able to push their budget up to $350, and that home would have still been affordable. Whereas now, with rates just about double that, then and someone qualifies for that same price, 300 to 350, you're gonna end up with less house because you won't be able to find that same house or that same comparable house that was available when rates were at 3 a couple years ago that you would be able to find now. So yeah, but I think most home buyers are realizing that it just costs more to buy a house right now. But this stabilization is very necessary, and it's good news for both buyers and sellers. Okay, so little fun fact for you, this chart that I'm sharing with you indicates inventory or listings right now and in previous years. So for the last 7 Januaries, the column to your extreme left indicates January of 2017, and the columns following that is each January after up to January of 2023. You will notice that January of this year we were just over 318,000 listings. January of 22, we were just over 336,000. January 21, we were just over 392,000. And take a look at January of 2020. We had just about 421,000 units or homes available for sale. Now, of course, we know in 2020, that was not so long ago, we were all collectively introduced to the pandemic. We were all introduced to this health crisis, and it was very uncertain times for the nation and for many of us. Many people lost their jobs or were furloughed. Many people thought that along with this health crisis, a housing crisis was sure to follow. However, what we noticed was that I know personally for me, there was a slight pause, like, hey, is going on? So there was a slight pause in business. However, I want to say a few weeks or a month after, business continued as usual. I actually was still taking listings. Of course, there was concern, and we had to do that carefully and in the best way. The listings I had at the time were vacant. There was one that was not. So that particular seller decided to pause. However, a few months later, that home did go on the market. But what we found is that people, of course, were using their homes differently, and nationally, there was the great migration, right? Because people were now moving to the suburbs or out to the country. No one wanted to really be in close proximity of other people if they could help it. So what we realized was that although this health crisis was going on, housing did not take a hit. In fact, it ended up being one of the busiest or strongest times in real estate, and 2021 followed with that. 2021 followed that trend, and up until I want to say the summer or July of last year, 2022, was the first time I noticed a slight pause in business. Of course, that was due to elevated interest rates and elevated home prices. Inflation was happening everywhere. So summer of last year was the first I noticed like a pause since for the last 2 years. And of course, as mentioned, that's due to inflation. But I wanted to share this chart with you because I'm sure you've seen or heard people talking about a foreclosures or a big housing crash underway or housing crisis. This chart should indicate to you that the data does not support that. Notice the amount of inventory that's on the market as of late. The most recent is January 2023 in comparison to the years prior. So we're still low on inventory, although we have seen that pause for the last, I want to say 7 months, 8 months now. We've seen a slight pause. And of course, that was necessary, or the spike in rates happened in order to tame inflation or to bring stability to the marketplace, because elevated home prices, elevated interest rates, those two combined are not sustainable. So that, unfortunately, the spike in rates was a necessary evil, but we are now on that downward trend, and we are seeing home buyers come back to the marketplace. And that's good news for both buyers and sellers. And one thing I want to note, we never want to see anyone lose their homes. So although we are not gonna experience a recession as we did in 2008. Yes, people are still losing their homes to foreclosure. That's unfortunate. However, many sellers, the majority of homeowners or property owners, have sufficient equity in their homes. And if for any reason are not able to pay their mortgage or sustain paying for their mortgage, should be able to sell, satisfy that mortgage, and also walk away with a bit of money in their pockets so that they can move on with their lives. All right, guys, so here's a look at the housing market report for the Greater Atlanta area. And these are the counties that's included: Cherokee, Clayton, Cobb, DeKalb, Douglas, Fayette, Forsyth, Fulton, Gwinnett, Rockdale, and Paulding. Now, this says January. However, please note that this is the most recent data. We always wait for the full month to complete before any data, housing data, is released, and that is, we want to be sure that all of the information is collected before determining the stats for any particular month. But that said, this is the most recent data. So let's focus now on closed sales, days on market, the average sales price, and the percent of list price received, as well as inventory. So if we, of course, the middle column is current, January 2023. The column to the left indicates a year back. So you can make those comparisons for yourselves. So for January, as of January, end of January, pending sales were 3,099. Pending means sales or homes that were under contract. What's more important, the more important number is the closed sales. Now, closed, of course, means that transfer was actually transferred and the closing occurred. Days on market until sale. So 45 days. And you can see a year ago, the days on market was 23. So we have seen an increase on the days on market until the sale. And days on market is from the time the seller accepted an offer up until the time it closes. It's not unusual. So 45 days is the standard time that it takes a traditional lender to process a home loan and fund it. However, as we can see, that comparison is just about doubled just year to date. I'm going to go to average sales price. Median sales price to me doesn't hold much weight. Median sales price, an example of that is if you have seven homes that sold and they all have different prices, you're just finding the middle. So whatever that middle is between those seven, you're using that number. Whereas the average sales price, math is actually done. So they actually do a calculation and adding up all of those numbers and then dividing it by the number of homes sold. So the average sales price, $469,671. You can see that average sales price year to date has increased since a year back. So even though the days on market has doubled or increased, The average sales price has also increased, which tells us that there is still a healthy buyer demand in the marketplace despite the slowdown of the last several months due to spiked interest rates. Here's another important number or stat: the percent of list price received. Now, this tells us whatever the seller is asking, did the seller receive their asking price? Well, this shows us that the average is they're receiving about 3% or 2.5% less than their list price. So 97.5% is what is the percentage of list price being received. So that's still pretty good. And let's jump to month supply of inventory. 1.9. That is up almost double since a year back. However, this still indicates that we're in a seller's market. And okay, so the first chart was for single family detached. This chart is for residential attached, meaning townhomes and condos. So I'm just going to run through this one. Again, the middle is where we are currently, January, or the most recent data, January of 2023. The closed sales, well, first the pending sales, there was just under 1,000, 995. Closed sales were 669. And I want to make a note of this. So pending means under contract. Closed means that title was transferred and the closing actually occurred. Now, out of this 995, 600 and let's call it 70 actually closed in January. This doesn't mean that that remaining, let's call it 300, did not close. Some of them, not all of them may have, we don't know unless we actually look into those numbers. However, some of those may have gone under contract or went pending mid-January or the end of January, so then they would have a closing date of February. So once February data is released, we'll be able to track those numbers. In any event, the amount of closed sales, we're going to call it 670. And days on market until sale was 39. That is an increase. We're going to call that 11. Yeah, so it was increased. That's 11 more than a year back. And the average sales price for residential attached, $364,000, 102. Let's call it 364,000. Again, that's an increase year over date. If you look back a year, the average sales price was, we're going to call that 350. Again, this indicates that there is still strong buyer demand in the local Atlanta metro area. Percent of list price received, 98.5%. The amount of inventory, the month supply of inventory we currently have is 1.9. So that's interesting. We have the same amount of attached homes as we do residential detached, which is just under 2 months. Again, an indication of a seller's market. We are still in a seller's market. To summarize, mortgage rates are on a downward trend. However, a drastic reduction is not expected. Home buyers have re-entered the marketplace and will continue to do so as interest rates stabilize. We have seen sellers reduce their asking price and sellers are more flexible with concessions. However, home prices remain resilient and competitive. Housing inventory is still relatively low and we are still in a seller's market. As we continue to maneuver through 2023, I suggest you maybe take some time and read beyond the headlines and of course be mindful of your source. As always, it's my goal to provide accurate information from trusted sources so that you can make the best decision for yourself and your family. If you would like a housing report or data specific to your neighborhood of interest, please don't hesitate to contact me. By the way, please, wherever you're watching this video, be sure to like it. In fact, please subscribe to my YouTube channel and find me on Facebook. I would love to connect with you. That's all for now. Until next time, take good care.